This is your weekly market update for the Greater Portland, Maine area. These are closed sales in the last 7 days, median numbers. So the days on market shot up quite a bit to 31 days on market. The list to sale ratio is still at 100%. Your average or median close price went up quite a bit to $524,000. The average 30-year fixed interest rate basically flat at 6%. And of course, US inflation down year over year to 2.4%. Sorry, down month over month, 2.4%. Two things I want to talk about today. More about the job numbers and how those could affect rates, and the war or conflict in Iran and how that could affect rates. So job numbers, man, job numbers just continue to be abysmal. When you look back over 2024 to 2025 and going into 2026, you just see like the annual job creation, boom, boom, and then this massive drop off in 2025, and 2026 so far is also disappointing. In January, we heard from the private payroll, ADP, 22,000 jobs. That's now been adjusted down to 11. In February, 63,000 jobs, which is awful. And unemployment rate has ticked up 2 months in a row. So typically, when you see a weak job market, the Fed is thinking about maybe lowering rates to give a little stimulus to the economy. We'll put a pin in that. So now we're going to shift over to the Iran war and how could that impact inflation or interest rates. So Iran war, important oil production there, important oil production there, not only just in the strait there, but also surrounding countries that are being impacted where they produce oil. So if this continues, oil production or oil transportation could be impacted. Prices will go up. If the price of oil goes down, the price of production and transportation of goods goes up. And obviously, if that goes up, overall inflation goes up. When inflation goes up, typically the Fed will raise rates to damper the inflation. So you have these two conflicting things: weak job numbers, but the potential for a rise of inflation specifically because of the war in Iran. And because of that, you have mortgage rates kind of hovering up and down. You have the stock market, you have the bond market, all sort of in limbo, waiting to be like, is this a 3 week war? Is this a 3 month war? What is going to happen? How drastically is oil production and transportation going to be impacted? Over the next 3 months or three voting periods, it's not expected that the Federal Reserve will cut their rates, and mortgage rates might go up in that time period. So overall, I would say our plans for 2026 and rates and real estate have been impacted by this war, as you might expect. And similar to last week, I would advise that if you need to do something, I would go ahead and do it. I don't think there's going to be a rate drop boom coming in 2026. I didn't before the war, and I certainly don't after. I hope this information was helpful for you. If you have any questions, let me know anytime.